You are watching All Things Real Estate and More with AnnRileyCaldwell, with a brand new episode on credit score.
And I'm here today with Jeff Suter. We are talking about all things lending, it's more specifically. So credit score, everybody hears about it. A lot of people know what it is. A lot of people aren't quite sure. I'm sure there's misconceptions out there. So we're gonna clear a few of those up a little bit here. So first of all, let's just start with what is the basic definition of what is a credit score and why should anybody care?
Well, you're not going to buy a home without good credit unless you've got cash. So,
cash or credit score, one or the other.
Yeah, one or the other. I mean, that's really what it boils down to. Doesn't have to be perfect credit. Doesn't have to be great credit. Doesn't always have to be good credit, but credit. That's our starting point. Is if you have bad credit, we can turn that into good enough credit to buy a home. Mm-hmm. But the start is to have credit.
So what's the first thing people should do if they don't have a credit score? Because it is possible to be into your 20s and even 30s or older and realize you don't have a credit score.
There are ways to buy a home without a credit score, which we can cover that, I guess.
Okay. Go ahead.
You want to cover that? So there's what's called non-traditional trade lines, which would be stuff like car insurance, rent that's not reported on credit, things like that. So you can buy a home if you have no credit score, which people generally are going to have a credit score. It's just going to be minimal.
Right.
But if you have no credit score, we can do it takes 3 non-traditional trade lines, 12 months of history with no 30-day lates.
Okay.
So you can be late. It just can't be beyond 30 days late in that 12-month history, and you can buy a home.
Okay.
Ultimately, you want to have a credit score because ultimately that's going to help you in life. So where I would start if you have no credit is you're going to not like hearing this, get a credit card.
Dave Ramsey just fell over. That was the thud that you heard in the background. Not all people are Dave Ramsey.
Use the credit card to buy Dave Ramsey's product so that you can get out of your credit card debt ASAP. I'm just kidding.
And then pay it off the next month.
So hear me on this. I'm not telling you to get in credit card debt, okay? You're using this as a tool to build good credit. That's the key. You want it to build good credit, you've got to have revolving credit. And what I mean by that is you're extended a credit line and you can spend it as you see fit. And then you're held to terms to pay it back with a minimum payment, not a set payment, such as a credit card. So a car loan would be an installment debt, not a revolving debt. So a car loan will establish credit, but it's not going to necessarily build your credit. So you want to get a credit card. Choose wisely, find one that don't have high annual fees. Interest rates are going to be what interest rates are going to be. They're probably going to be in the high 20s.
Right.
But the goal is to not max this thing out. The goal is to get, let's say, a $500 credit line, use it for your gas or your groceries once a month. When that bill comes due, you're not paying it off. You're paying it down to $10. The interest on that's going to be very low. But essentially, if you're paying it to zero, you're not using your extended credit. So what's getting reported is that you have a credit card, and even though you've used it, you've paid it to zero, so that's what gets reported. So it's not showing that you're using the credit line that's been extended. So you want to show that you're using it and using it responsibly and capable of not just maxing it out and not being able to pay it. So that would be my advice on how to start building credit.
So, and with that, we've talked in other podcasts about the importance of talking to us early on and getting specific advice for your specific situation, and talking to Jeff about, again, just making sure you're getting the right kind of card, that you're doing the right things with it. I've had some lenders tell people go put $40 on it and pay down 20 or 30 of it and let 10 of it roll over, and they put $400 on it. Totally backfired.
Right.
And we had contracts in place that ended up not being able to make it to closing. So there's a big difference between 4-0 and 400. Just saying.
Absolutely.
For people who want to get carried away, that's not probably what Jeff told you to do.
Exactly. Leave yourself in a winning position. Use it as a tool, not as a means to live life.
Right.
You're using this to only build credit.
Right.
That's it. So yes, very, like I said, groceries or gas one time. and leave yourself in a position, because you would have paid for the gas had I not told you to get the credit card.
Right.
So you're spending
You're not
money
going on
that
Amazon
you should
and doing
have.
a shopping spree. You're
Correct.
actually just paying for something that you would
Absolutely.
normally pay cash for.
Absolutely.
Yeah.
Absolutely. So leave yourself in a winning position.
We hope you enjoyed watching All Things Real Estate and More with AnnRileyCaldwell. To learn more about Ann Riley, or for your real estate needs, visit notyourordinaryagent.com or call 615-930-0313. Thanks for watching.